Hello everyone, Bruce Fate and
Steve Tinkham.
with Catalyst Lending. We're just bringing you the Friday mortgage rate update. Today is actually Thursday the 12th, but just want to give you a little bit of tidbits on the market. Obviously the interest rates are really good. We're at like 3.5 on a 30-year and around 3% on a 15. So very stellar interest rates. We've got good news and bad news, I guess. We'll start with the bad. It was the Economic Cycle Research Institute has labeled our economy as being in a recession. Officially in a recession. So we had some other bad news with the jobless report.
Well, actually, there's a little bit of good news. I mean, the bad news is still 350,000 unemployment claims filed, but it's down by 26,000 from the previous week. So I guess you could say it's getting better. If you can call 350,000 people a week filing unemployment. I mean, the thing about last week was that the jobs number came out from the previous month, and we created 80,000 jobs, but 85,000 people went on the Social Security disability rolls.
Ooh.
Ouch.
No doubt.
I guess if you just go along enough, you become a drunk and file disability because you can't hold a job. I don't know.
I'm not sure what that all says, but the economy obviously hasn't been doing very well. What this means as far as the mortgage rates, though, is just they're at all-time lows, and they have been, and the home values are really good. So I personally think real estate's a great investment right now. So I don't know if you have any investors that you work with, but it's a great time to be working in the market and trying to get some equity in houses. So
I just want to take a time out to explain what's going on, why the bond market is so good here is because what's going on in Europe, and the best way I can explain it is all these countries that are having problems. Now it's Spain. It's been Italy, Greece, Spain, Portugal, Ireland. All these countries that have needed bailouts. Is what happens is when the first one started having problems, Greece, they said, okay, they need $100 million. Well, what they did is they'd go to all the other European Union countries and say, okay, your portion is 15 million, your portion's 15 million, and we're going to charge you 7% interest on that money. Well, every time that happens, all of a sudden I'm having troubles as it is. Now you're wanting me to pony up and make extra payments on this at a higher rate of interest.
Right.
So it's kind of a self-fulfilling prophecy. It says these weak countries just keep falling, and then there's more and more pressure added. That's what's happening. The thing I want people to understand is that right now our bonds or treasuries are priced at 1.5%. So basically our country is borrowing money at 1.5%, practically free. And we still have big time troubles here with our deficit and not enough money coming in to pay the bills. We have to borrow money. So what can happen and what we got to be wary of is that these low rates are here and they're probably going to be here for the next year or so. But we've got to make sure people understand is that what happened in Spain the other day is they went from 3% paying on their money to practically overnight 6-7%. If that happens here, we are in a boatload of trouble. I'm telling you, because you're talking about going from 1.5% to 6%, and if nothing changes, it's going to happen. And when that does, we've got a huge problem on our hands because our country will not be able to afford to make the payments. And you can't just print money. I mean, they can try, but it's just not going to be enough.
Too many effects on that if you do something like that. So
the point is that somebody's got to understand is that if inflation hits and when it does, if you're locked in at a house payment of $800 a month, and your neighbor down the road is paying rent on the exact same house of $3,500 a month, guess who's happier? So it's your moral obligation to sell houses and get them locked in on a fixed rate.
Well, right now we've when you talk about that, the amount of people that are renting and the cost of money and the bottom line, it's smart for them, it's good for the economy, and obviously good for you and good for us. But the bottom line is we really just want people to take advantage of where we think there's some opportunity, and that is in the real estate market. So without keep going any further, you guys know how to reach Steve or myself for loan pre-approvals or home refinance, just different quotes. I know the other day I actually refinanced someone who was in an ARM still. They were in a 7-year ARM. I haven't done that in a while. Everyone's been out of those.
Under a rock or something.
Exactly. So bottom line, feel free to contact Steve or myself. You know how to reach us right up here.
Oh, here's a summertime tip. Not that I would partake in anything like this, but he might. But I saw this recipe for Jello shots, what you do is you take your kids' Duplo big Lego blocks, those big Lego blocks, not the little tiny Legos, but the bigger ones, and you pour your vodka Jello mixture in those, and then you can stack your Jello shots like Legos.
Cliff Clavin is out again.
Hey.
You guys have a great weekend. Take care.
Bye.